Welcome to another AVID chat. David Harple and Jack Arnold. Jack, great to see you on a beautiful sunny day.
Yes, it's been actually really nice.
Yeah.
The date, we need to start saying what the date is that we're doing this, because people think like, oh, this was yesterday. So
That's true.
We had
February 1st.
The coldest weekend in like 3 years in Florida this past weekend is Tuesday.
That's right. February 1st, this is episode 64, I believe, which is kind of cool. We're getting closer to 100 than we were at 0, which is exciting. And today,
Yeah,
we're going to kick this thing off really in the midst of what we would call, I guess, tax season and some tips and strategies that you can do to prepare for the taxes. So if you're like any of us on listening to this call, you've probably started to receive already. Maybe it's 1099 from investment accounts, your W-2s from your employers, all sorts of tax statements. So what should we do with those? And really, are there things that still can be done for the 2021 tax season is the first place we'll start.
You know, the obvious things, keeping, staying organized. I use like a Google Drive folder, and I just kind of dump everything into there. So like I already have a 22 version. I have an HSA that I use. So any kind of receipts I get when I use my HSA, I drop in that folder. So I'm kind of planning as the year goes on and kind of dumping things in there. But I use like I said, a Google Drive or like an online Dropbox, something like that. Mm-hmm. And I put store my forms in there electronically. That's what works best for me. That's what I do. So just, keeping things simple, basic organization, I would say, first and foremost.
Yeah. I think that's good. Some tactical things, obviously 2021's over. There's not, in our opinion, a ton of tax planning to do. So this is retroactive, I guess. A few things would be make contributions to your IRAs if you can. Those are tax deductible if you qualify. Jack just mentioned an HSA, a health savings account. You can still contribute to the health savings account for last year. That also is tax deductible off your gross income, so it could help you out. Those are two, I would say, big ones for reduction in your 2021 tax liability.
Yeah. If you're eligible for an HSA or Roth IRA or, traditional, if you can deduct it, perhaps, some other, I guess, maybe lesser known or more niche things, SEP IRAs, they have actually a longer deadline, actually out until the extension, if you file an extension. So there are some things you can do to reduce your tax liability for 21 in 22, but there's not a lot. Most of the work planning for your 21 taxes in the 21 tax season, really would have been done last year. There's, Once you kind of cross December 31st, your options are pretty limited as to what you can do to affect your tax liability, especially when it comes to investing and tax loss harvesting and all of these things that has kind of come and gone. So I would say if that's the case, I would start, how do we make this tax season, say the 21 tax season that you're filing in 22, if last year most of the tax planning would have been done before December 31st, how can we get some information from our 21 taxes and then apply that information in 22 so that when 22 tax season comes in 2023, we've already done 90% of our tax planning, our tax strategy, whatever that may be. So I think that's more of the lesson to learn is be proactive with the stuff.
And I would say that this strategy that we use really to help people really proactively think about things is not rocket science. There are some basic calculations that you can take away, hopefully from this chat, and use once you get your filings done. So let's just use an example. Let's say you make $200,000, whether you're single or a couple, doesn't matter. Just we're going to throw out a number. $200,000 a year. When you file your tax return, you'll be able to see right on there at the end of the day what was your net income. So you have your deductions and all of those things, and you end up with a net. So let's say that $200,000 and your net income was $160,000. Essentially, that's how much you spent in 2021. Now, a lot of variables go into those, and we can kind of walk through those because I think diving a little bit deeper helps you start to plan.
Yeah. Like, where did that 160 go? some of it was almost certainly lifestyle spending. Probably a nice chunk of it was kind of lifestyle spending, which is totally fine, obviously. Some portion was probably saved. Some portion probably went to things that you didn't realize it was as much as it was. Some of it goes to housing, all these different things. But that 160 did go somewhere. And, at least now because a lot of times we will get, kind of how much are you spending every month? What is your lifestyle expense? How much do you need in income to maintain your lifestyle? And 99% of us, you do the stare at the ceiling thing. You kind of think about some of the things that come every month. You guess at a few things and you come up with a number that seems quite reasonable. And almost inevitably, that's way underestimating how much is actually going out, just because there's things that don't come on a regular monthly cadence for the same amount. And those one-off things kind of skew the number. And also the little things that are really random throughout the course of the month add up to be pretty big numbers a lot of times.
For sure.
So this is a way to back into how much is really coming in and going out. And if that's, and like you said, 160, well, now you have a number. Where is that going?
Right.
Some of it's going to my savings accounts, let's say. Some of it's going to my car payment. Some of it and how is that broken down? But at least to give you a rough number of how much money's going out, kind of your post-tax cash flow.
And I would preface this, there's no right or wrong here. I think this is just, like you said, tax planning for 2021 is over. So let's use that year to really give us some sort of basis to realize what we're spending our money on. And is there anything we want to do different? If you had 160 left over, maybe you saved 40 of it in various categories between retirement and kids' educations and whatever, cash reserve, paying down debt essentially is helping your net worth. And you're left with 120. Well, now okay, $10,000 a month is used for some sort of lifestyle. In my opinion, I would say drilling that down to at least some categories, shelter, food, necessities, and other things would give you some sort of barometer to just say, okay, how do we feel about that? Am I good that we spend $3,000 a month on just outside lifestyle? Sure, then keep doing what you're doing. If you say, well, man, it's $6,000 and I don't even know where it's going, well, now we can dive a little bit deeper into strategies to do that. But the essence here is that you're using your tax return and everything you've done to start to pre-plan for, essentially if you could get your taxes done earlier, let's say March.
Yes.
You have 9 months of this year to really tweak and plan and set things up.
Yeah. Yeah. I mean, that's one thing I would stress is, really get them done as soon as you possibly can, Obviously, if you're getting a return, you want it done, you want your money back. But even if you owe, you don't owe it until the tax filing deadline. You can have your taxes done March 1st and not pay until the deadline. There's no rush to pay, but at least you have the information. The information is what's valuable to you. This is kind of my cash flow situation. And the good thing about using your tax return is it's a good way to back into. I've found that if you try to work from bottom up doing some kind of cash flow analysis, it's easy to get caught in the weeds as to, I spend a little here and a little there and I spent X at Dunkin' Donuts or something, really beating yourself up about these little things. But if you start from the top, you can start from the top and say, here's my gross, here's what I paid in taxes, here's how much I saved, X dollars. And then I have this leftover amount that's pretty variable amongst these things. How far do I want to drill into that? Am I fine just with I know every month this is what I'm spending. I don't know really where it's going. How far down do you want to start to drill into it? And there will be a point where you're fine getting to a certain level and that's fine. Other people want to go all the way down to, what's my Dunkin' Donuts versus my Starbucks budget, way into the weeds, which is fine. You can drill down as far as you want, but it's easier to start from the top, drill to the bottom than it is to start at the bottom and all the weeds and try to work your way up. You never get out of that. So it's a back door to doing a cash flow analysis, and it can be fairly simple to do for sure.
No doubt. And I think it also helps complement those that are, I would say, we're focusing on growing net worth, doing better, increasing our positions for our future selves, is because you can right off the bat say, how much did I save out of this leftover? There's no right or wrong. Yes. We always use a rule of thumb. 20% is a great way to start. That'll get you probably 80% of the way there to what you need. But if you go through that simple math and say, yeah, we saved 3% of what we're making.
Yes.
I think that's the awareness thing. Start there and then spend. It's very difficult. Most of us have been either raised or taught or just by default is we make money, we spend it, and then what's left over, let's save that. And we would say,
Yeah, right. Exactly.
challenge your brain to switch gears and go the other way first.
Yes. Right. Have like a healthy profit margin type of thing. Like how much this is how much profit I want to have. And yeah, man, the cash flow thing is tough. Nobody likes doing it. It's probably one of people's least favorite things to even talk about. But in my experience, we've done this so many times. The biggest thing and the best way to make progress is to kind of raise your awareness as to what's going on so that you can make proactive decisions on what to do instead of things passively happening. And the way to do that is have a good idea of your cash flow situation. Nobody cares what you spend at Starbucks versus Dunkin'. I don't care what you do with any of it, to be quite honest with you. But if you're trying to do something with it, it'd be good to know top to bottom, where is my money going, and have some, this is how I direct it. And tax season is a good time to use that as a retrospective as to what happened last year. Let me go to the game tape, like I like to say. It's like, what happened? What improvements can we make? Where can we improve? What do we do good? What do we do bad? And let's try to make some improvements going forward. What adjustments do we want to make?
No doubt about it. So what we do at AVID, help people create a purpose-driven money system. We start with the tax return. You can do this at home yourself. Look at that as not just I get a refund or I owe money, but where did the money go? Jack's gone through multiple examples of how to do that quickly. If we can help, let us know. That's what we're here for. As always, we say like, comment, and subscribe. Pass this along if you find it valuable to some of your friends. It was a good chat today, Jack.
All right. See you, Dave.
See you next week.